Greetings all. I've had a few requests recently to drill down a little deeper into the use of the general monitor screen that we use in the M-33 process. So here we are looking at it, and most of you who've watched the videos know that this is the upper panel. Actually, let me get rid of the crosshairs here, be a little less distracting. The upper panel is the price, with the green and red lines showing the current range. The middle panel is the signal panel, and we're watching the red line of the ticker across the blue line of the background. Let me go get rid of these annoying things here. Pain. Always invisible. There we go. Now they're out of the way. And the third panel at the bottom is the alert panel, as you know. To the right, you have the watch list that is associated with whatever tab we're looking at. So right now we're looking at Treasury yield juxtaposed with Forex values, with currencies. And we're looking at the 30-year yield right now. So the power in this comes from coming up to this little icon right here, where you can select a layout. And if you go and you select the 2 layout, where you have 2 panels side by side, you're then able to compare 2 different tickers. In this case, we've got the 30-year yield, and we're comparing it to an inverse ETF showing the value of the actual bonds. And as happens, of course, as yields go up, the bonds come down. You can then go and select the third one if you want. Let's take 3 panels. And now you not only have the 30-year yield, which is going up, but you can also see that the dollar is going up with it, while the Treasury values come down. And that's a very common juxtaposition of those 3 factors. And what you watch for, of course, is if the yields are going up, you watch for the signal and the alert to indicate that it's about to switch and start to fall down instead, because when the yields come down, the value of the treasuries will turn and start to go up. In fact, this is looking here as if they've already crossed up on the 4-hour, but the alert panel does not have complete concordance yet. So I wouldn't actually be entering here, but I'd sure be keeping an eye on it. Let's go over to the next tab over, which is Equities. And you can see that the watch list automatically changes to the watch list of equities as well. And this one is set up so that I have the Standard & Poor's 500 here. You want me to let me go to the double one first, just so you can adjust your eyes to what's going on here. Here's the double panel. We're looking at the S&P 500 here, which has plummeted. And this is an inverse ETF that tracks it, SPXU. And because it's inverse, as the S&P comes down, the SPXU is going up. So this is a situation where during the day on the 14th, when this crossed over down on the Standard & Poor, I came over to SPXU on the same day, and you can see here where it crossed up. And that's when I went long on SPXU and have ridden it all the way up until now. It looks like it's beginning to bend and cross over and cross down. And you've also got the alert panel saying the same thing. So we'd take profit here. Having got in at around $10.30, we'd be getting out at $11.30 or 40 cents. So that's $1 on a $10. That's about 10% in the space of 3 days. Let's change this to a 4-panel display. And now you can see that I've not only got the Standard & Poor's S&P here with its inverse ETF, with the index coming down and the ETF going up, but now I've got the NASDAQ over here doing the same thing. The NASDAQ was falling down and its inverse ETF, QID, was going up. And in fact, as long as we're at it, let's go to the 6-panel. And now we've got the Russell with its inverse ETF underneath it. So here you are now looking at the entire North American stock market indices laid out, where you've got the S&P with its inverse ETF, you've got the NASDAQ with its inverse ETF, and you have the Russell with its inverse ETF. And so forth ad infinitum. That's what this is really all about, is you're coming in here. And actually, here's one more that'd be interesting to look at today, is the alert panel. This is Hedgeye's RTA product, the real-time alerts. And I have the 6 items in here that they put on this morning that they said were going to go up. They were all longs. And as you can see by the bloodbath of red in most of them, it was not a terribly propitious moment to go long on some of them. Certainly not. Actually, let's run through it a little bit. The logic. DPZ is interesting because it's near the bottom end of its range. However, it's just crossed over down and is still going down, and the alert panel is mostly in concordance going further down. So I would not have wanted to go long on this today. I'd rather, it may very well be a long coming up, according to the calculations that Hedgeye does, but I'd want to wait until I actually got the signal that it was time to get in. If you look at uranium, it is showing some concordance going up. It has crossed up going up. The only difficulty is that it's getting pretty near the top of its range. So you might try a little scalp in here, but be careful because it's bending, its momentum is iffy, the alert panel is mixed, and so forth. But that might be worth a try. With ATVI, I'd stay away from that. Obviously, it's actually crossing down. The alert panel is almost all red. It's at about 30% of its altitude, so that's not a signal to go long yet. USO, concordance on the alert. It has just crossed up. The momentum is beginning to appear, so it might be worth a try, although it's at 50% of its range already. It would have been nicer to have got in down here, but at least it's not actually running against you today if you get in. And there's one here related to Japan. It's at the very bottom of its range. It's just crossed up, and concordance is coming in. Now, this one might be interesting. This one might be worth a try. Just for fun here, let's put it up on its own complete screen on its own. Yeah, that's looking interesting. It's just had quite a run down. It's just crossed up at lunchtime yesterday. The concordance is beginning to come in, and it's just coming off its lower end of its range. So that might indeed be one worth trying. And so forth. The Israel one was interesting yesterday too. It's come all the way down. It's at the bottom of its range. Unfortunately, it's still signal is still well below the background noise, and it's got massive concordance against you running down. But if the Hedgeye product is saying that it's bullish, their math is often very good. So they may be seeing something in the underlying numbers indicating that this is going to turn at some point. But it would have been a terrible mistake to get in long with that alert that they issued this morning. You're better off to wait for the signal to catch up and actually indicate that it's time to get in. You'll get in at a much better price. And that's pretty much it. Bye for now.